Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For all trades, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is How to Day Trade Using Fibonacci like the pros. Alright, let's get started. We are looking at the dollar yen, though we are using a currency pair here. This strategy is valid for stock, for commodity, for crude oil, for gold, okay, for silver, for indices, okay, for all financial instruments that are moving fast. All right. So if you trade stock, okay, stay with us and watch this video. All right. We can see that this currency pair or this financial instrument, all right, the dollar yen went up from here. Where I put my green spot on this chart, all right, went up from here to this point here. The progression, the price progression from this point to this point is bullish, yes or no? Because it went up, it displayed high lows, high. Though we can see it on the hourly chart, the price went up. If you went to a lower time frame, you will see lower lows, lower high, okay? Now the price is pulling back, okay? There is a profit taking, a pullback or a retracement is a profit taking, all right? Traders are taking profit, all right? So, as the price is pulling back like this, a lot of Fibonacci traders will start buying at different Fibonacci retracement level. The first group will try to buy at 38.2% level. These are aggressive Fibonacci traders. There's no point to be aggressive with the market or to fight the market. The second group will try to buy at 50% level, retracement level. Another group will try to buy at 61.8% level, where the price is now. The price now at 61.8% Fibonacci retracement level. I'm going to call out the 61.8% retracement level into turquoise, okay? So we can see on the chart that's the 61.8%. Another group of patient Fibonacci traders will be waiting for the price to come to 78.6% level. Some of them are Gartley pattern traders. They would like to buy at 78.6% level. Some traders who understand the BAT pattern, okay, will be waiting here at 88.6% Fibonacci retracement level. The smartest traders will be waiting for at the cycle point. All right, the last one here, that's what we call a cycle point, a total retracement. I'm going to call out the total retracement at into red right here, and if the price reaches this level here, somewhere in this zone of the red line, red horizontal line, that's a cycle point because the price started here, the move went up and went around and came back to the starting point. This is a cycle point. A total retracement is a cycle point. Let's move on, ladies and gentlemen. We want to day trade. We do not have the whole day. We want to take value signal, okay, at the value support or value resistance level, following the market pattern. We do not want to make a day trading decision on one single time frame. It's a big mistake. Next, we must also check the economy news, combine the technical with the fundamental. What I've said 100 times to traders, if anyone is saying to you that you do not need to pay attention to economy news, they are fooling you, you can run away from them, all right? Okay, so now we want to day trade. Ladies and gentlemen, suppose we want to buy at 61.8% because the price here. Why do we need to look for? Now, the first thing I need to say to traders, for all day trading signal, there must be a valid setup. When we see the setup, we must validate the setup. All right? So there are guidelines that we follow if you want to day trade. and this is what the professionals are doing all the time. If you are violating these guidelines, okay, you want to manage the risk. So you say, okay, I want to give it a chance. This is a compassionate trade, all right? You want to take it, you want to control the risk, which means you are just trying to take, okay, a punt, get in, all right, and see whether it's going to work for you. Trader will do that sometime. In that case, you want to control the risk carefully. You don't want to risk too much money. The general rules is to apply the 5% money management rule. All right. So the price now is 61.8, and we want to buy. Now, some traders that understand, okay, the candlestick pattern by Steve Nissen, the expert in this matter of candlestick pattern, we look for a candlestick pattern, okay, at a key Fibonacci retracement level. You can see there was one here. You see here, the price went down at this stage. You see, it went down to this point. We have this doji followed by a bullish candle. This is a candlestick pattern, a bullish candlestick pattern. In fact, this was a kind of bullish engulfment. See the tall bullish candle. Traders, after this hourly candle, because we're on the hourly chart, after this hourly candle is closed, because they understand the candlestick pattern, they have seen a bullish candlestick pattern at a key Fibonacci retracement level, they will start buying. It's not a bad decision. After the pattern is completed, they start buying. You see, the first candle went bearish, the second one was bullish, but now again, everything returned to zero. So these traders, I hope they are controlling their trade carefully. The price, okay, went again in the opposite direction. The move did not continue. All right. But it was not a bad decision, so they won't feel upset about it, though they are not happy that maybe their trade, when it becomes a losing trade, they will not be upset. It will not affect, okay, their emotion. They will not react irrationally because of that trade, because they know that they follow a correct procedure, which is great. Another group of traders, all right, price reaches a Fibonacci retracement level, all right, they will look for a signal, all right? A signal, all right? Trend is broken, whatever. Or they will use an indicator to give them a signal, blah, 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 at a key Fibonacci retracement level. And they will take the trade. Sometimes it will work, all right? But there is an article that I call Fibonacci trading, Fibonacci gambling, okay? At Hub, you can go to Hub pages, or you go to Google, type in Fibonacci trading, Fibonacci gambling, written by myself. You will see this article and read about it. In fact, what a lot of Fibonacci traders are doing, they are forcing the market. There are some software even being programmed to buy all the time at 50%, 38%, 61.8. These are aggressive, okay, software. But this strategy, some of, okay, the hedge fund can use it, and they are controlling the risk. They use a standard risk control, and they don't care whether it works or not. But they use the same, okay, stop loss or the same strategy that they control. They know the risk for long term. All right, they have tested it. Okay, if it's working for them, that's great. But there is a better approach. Okay, so suppose we want to buy here. Okay, we're on the hourly chart. We will not enter the trade on the hourly chart. We will say this is a setup. Okay, so we see a setup. The price at 61.8% after a bullish move. All right, it's a setup. Good. Now, what do we need to do? Okay, some trader will say we go to the lower time frame and zoom into the price to enter the trade at a low risk entry point. That's not a bad answer. It's a 50% correct. The best approach is to go now to another time frame, because we see a setup on the hourly chart. We need to go to the higher time frame to see the bigger picture. Most of the day traders do not want to do that. Okay, they don't want to do that. We need to go to another higher time frame to see what's happening. After we have validated the setup on a higher time frame, which means the price at a valid support level. Okay, looking at the setup, the market pattern on the probably on a 4-hour chart, daily chart, higher time frames. All right, even go to the yearly chart, it's up to you. We will validate this setup. Okay. All right. After we validate the setup, we go to a lower time frame to look for, okay, a low risk entry point. All right. You may say to me, George, this is too much, but it's just because you don't want to see a setup and start trading it, okay, in a go. And maybe here you see these people, it was not a bad decision. The price went back down. Why the price going down? The price going down after a bullish move, the price looking for a better support level. We just need to wait patiently until the price confirms for us a better support level. How do we know? The price will start displaying higher lows, higher high. That's how we know. All right? Maybe we will not see the higher lows, higher high on this hourly chart. We may have to go to another lower time frame, 5 minutes, 10 minutes, and start seeing the higher lows. And once we see a higher low from this point onward, which means this is the origin of a new move, okay, we want to know what's happening. But there is another group of traders that use Fibonacci in a different way. All right, these are area wave traders. What I say to traders, if you are trading, you are day trading for some time, 2 years, 3 years, 4 years, after one moment, even if you don't care about the Fibonacci mambo jumbo, as some fundamental traders call it, you need to go and be a little bit curious and learn a few things about the Elliott wave patterns. These traders will look for an Elliott wave pattern at these key levels. They understand the price structure, which means they count the waves, all right, and to know what kind of move it is move from here to this point here. They want to look, what I say, look inside the price. They will use a Elliott wave pattern with the Fibonacci retracement levels. It's powerful, it's very powerful to combine the Fibonacci and the Elliott wave patterns, the corrective wave patterns, and the Fibonacci retracement level. It's powerful, okay? So now we are here. I don't want to talk about the Elliott waves. I'm an ordinary trader looking at the price itself. I can use MACD, I can use stochastic, blah, blah, blah. All right, so the price here now. Okay. Look, this is a support level, isn't it? This turquoise line, if you extend it, it's a support level, yes or no? It's a support level. How do we know? We see the reaction of the price at that level in the past. Price was going down and hit it here and went up a little bit. It's not a very good support level at this point in time when we were here. Here it did below it and went above it and went up a little bit. It's not very convincing, this support level at this point in time. Here you see, it went back above it and retested with this red candle and ran fast. Now, this support level is becoming very strong. So, in fact, this bullish progression from here to here, this support level is quite good because from this point, the price ran fast. Well, interesting. So, we can say this is not a bad support level. But anytime we are looking for opportunity to buy at one support level, we must not ignore other support level. All right, there's one here. This one here. It went down and then went up here. You see, this is also a support level. But this support level will provide us with a lower risk compared to this one because we will hide our stop loss below the previous low. But below that, there's another support level here, which is the 88.6% Fibonacci retracement level. The one here is 78.6% level. All right, the one below. So there are other Fibonacci retracement level. We don't want to ignore it. So the next thing we need to remember is that whenever we want to buy or sell at a key Fibonacci retracement level, we must not ignore other Fibonacci retracement level. Some professional traders like this, they will buy at 61.8 and they will place their stop loss below the second Fibonacci retracement level, which is the 78.6% level. If it works, it works. If it doesn't work, they don't worry about it. This is their trading method. But the smart money will always like to buy at the best place. What is the best place? The best place is the cycle point right here. Sometimes the problem that a lot of day traders will face is that, all right, as they are trying to buy here, though they are correct to look for opportunity to buy. It was bullish before, people are taking profit. It's not too bad. They want to look for opportunity to buy. But the smart money does not care about that. The smart money want to buy. They want to buy at the best place, at the lower risk point. The lower risk point is this one here. So we face a challenge now. Do we buy here or do we wait until it reaches this point? Will the price change direction here and go up without us? No, it will not go without us. If it's going up all the way up, there should be some higher low we will see on the lower time frame that will allow us to participate in the markets. So, few things we can do, all right? A simple trick and tips about day trading with Fibonacci that I'm going to show you here. Use your trend line for the setup here. This is a setup. This is a trend line here. Let's color it into pink so everybody can see it on your chart. That's it. So is this pink trend line broken? No, it's not broken. So the price still below this pink trend line is a bearish pink trend line. Is still bearish. If you receive a signal here to buy and the price going up, we will not say that the price will go to 138% Fibonacci retracement level, 161% Fibonacci retracement level, extension level. We will just go step by step. So if it's going up, we are watching the resistance, the horizontal resistance, and also the normal bearish trend line. So if we receive a buy signal here, the price going up, we are watching the resistance level. But because if the price going up, the price looking for a better resistance level, step by step. So we will, if we come near the pink line, we will not ignore it. We decide to secure some gain, all right, or even take some profit, which means we will prefer it to go above the peak line and maybe come back and retest it and then continue to move to the upside. All right, but here we are now. Okay, so this is a setup. We must validate the setup. I don't want the video to be too long. I have talked about that already in another video. Another thing I want to bring to traders is this. We have posted a video recently at www.youtube.com/trio. This is about bullish trade video 1, bullish trade video 2, bullish trade video 3. Check those videos and to understand. I have discussed a specific trading method using the 50% Fibonacci retracement level. We know that the 50% Fibonacci retracement level is a psychological price level. This is the 50% Fibonacci retracement level. I will color it now. Let's find a nice color. I use already green on the top here. I will come back to that very shortly. Let's color it into orange, okay? This is the 50% Fibonacci retracement level of the move from here to here. We know that the 50% retracement level is a psychological price level. So, the zone, the price zone above the 50% level is a bullish zone. The zone below it is a bearish zone. Do not forget that. So if I'm buying here below the 50% at 61.8%, I'm still in a bearish zone. I need to be careful because there are still bears hanging around here looking for opportunity to sell because they know that the price below the 50% level. All right. So you see, though we just want to buy, we just want to sell, all right, we need to do some verifications, all right, do this kind of exercise so we don't get into trouble, all right. So whenever we are buying, taking any buy signal below the 50% level, we need to watch it carefully. The price may go up all the way to the 50%, only to find a resistance right there and continue to move to the downside. This is the problem that 61.8% faced. The 78.6%, 88.6% is not too bad, but you have rooms before it reaches the 50% level. It's the dividing line between the bullish zone and the bearish zone. All right, George, I had enough of you. Let's move on. Okay, all right. Let's go now to my favorite time frame, the 3-minute chart. We know that we are in the zone of, you see the turquoise at 61.8. All right, ladies and gentlemen. So if I want to buy, for instance, I'm now on my crazy favorite 3-minute chart. All right. I know what is this pink line also. Okay, it's the trend line on the hourly chart. Look, if I want to buy, I want to see the price, at least on my 3-minute chart, start going up, okay, in a bullish channel. At least I want to see that. That will give me confidence, okay, to know that, okay, I can enter this trade. or at least I want to see some bullish pattern or some clear-cut bullish signal, or at least on the 3-minute chart, they try to break above the bearish trend line. I just drawn one here. So far, if I draw roughly, you can see that the price went all over the place. Something like this, like a channel. Let's color it now into green. I want the price to come out of my green channel that I'm drawing now. Before I will buy. I will not just go and buy like a aggressive or crazy, all right, crazy Fibonacci traders trying to force the market. I will not do that. So I will say, all right, either it's in a rising channel like this, or at least it come out of this bearish channel. If it return back inside the channel, we need to watch the median line of our channel. If it dip below the median line, we need to watch it, okay? As a day trader, we are watching our trade. We must watch it, all right? We trade, we are trading, okay, but we keep eyes on it. In case the music has changed, we want to come out because we are day traders. It makes sense? We will do the opposite. If you want to sell, price at 61.8% after a down move, retracement to 61.8. We will remember everything that I've said again, and we will do the opposite for that, looking for opportunity to buy. So right now, on my 3-minute chart, we may say, okay, there was a low here, all right, and maybe it's not yet completed. Maybe there will be another low here. Maybe there will be another low here. There's another low. We have a double bottom part. We must watch the nut. The nut is this one here, this level here. It must go above that level, okay, and we want to take it. So we will prefer something like this. So if this level is not completed yet, if it goes above, if it finds support here and then go above this small short horizontal line and gorgeously pull back, okay, something like that, and we will give it a chance, okay, we will give it a chance. So we will buy it nicely here, and sometimes it may not follow the instruction that we were our expectation, but we will find a way. If it's going up, to enter the trade, all right, we will find a way. Either trend line, common sense trend line is broken, all right, and we give it a chance. It makes sense, ladies and gentlemen. It makes sense, and it's also powerful. So we talk about all right, the setup, the signal, the entry time frame. Never to use one single time frame. Validating the setup, finding a low risk entry point. We want to pay attention to the price itself. Even if we are using the a technical indicator, all right, we need to pay attention to the price all the time, all right. But the mistake that a lot of Fibonacci traders are making, as I have shown you today, talking about my article that I call Fibonacci Trading and Fibonacci Gambling. You may Google it and find it, and you will see trader will challenge the price, try to buy at 38.2, price goes below it, they will try to buy at 50%, price goes down, go try to buy at 61.8, the price will go down, and they just gambling, in fact, all right. At least wait for a signal at that level on another lower time frame. At least, if you don't want to do any other verification. We also know that the 50% level is a psychological price level. Do not ignore it. Talking about bullish trade video 1 and video 2. All right, you may check that video on YouTube. All right, it's free. All right. So now, apart from the technical, I have also said that we shouldn't use the technical alone. You see now, there are more work to do, but you may say to me, Joe, this is too much. But you will be surprised if you just try to do it step by step. You don't have to start train like the expert in one day. You are learning, you are improving each day. That's why use a demo account, go steadily, don't force it. Because sometimes some new traders have a lot of money and they put in their trading account and they want to throw money at it, That's not the best way forward, okay? All right? That's not the best way forward. Like everything else, you want to learn it and have some experience, okay? Before you start to pushing it, all right? All right? Pushing it, all right? So here we are. So the next thing that I was also saying to you, we want to combine the technical and fundamental. Like this week, this is a dollar yen. this week, the daddy news, the daddy economy news, the non-farm data is due on Friday. All right, 8:30 a.m. Eastern Time. The professionals are aware of it. So they are very careful. They're not going to play with the dollar anyhow, placing trade anyhow this week. They're going to be very careful. So apart from all this I have said today, you may notice, or maybe on Friday, if the news is bearish, to push the dollar down big time. All right? All right? We may see some distortion this week because of that economy news as the professionals are adjusting their portfolio, preparing themselves for this important economy news. All right? So we may see a lot of blah, blah, blah. So after the non-farm data, the market may settle, and we will come back again and review, okay, our technical analysis. Sometimes you will see it, you may see a distortion, and then everything get back to normal, and then we take advantage of it because we know that we were expecting a kind of move, but there was a distortion. There was some distortion due to a major economy news that the market was adjusting to. So now the economy news is gone. We can come back again and look afresh at the charts, okay? Talking about Fibonacci extension, ladies and gentlemen, my view, I want to move on fast, so I've said enough. I want to remove all my lines now, okay? But I will put back the 61.8 where the price now. I'll color it again into turquoise. And we're going to talk about my expectation. My expectation for the dollar yen is that the dollar yen will go to the level of 9950 before we look for opportunity to sell. Traders that are following us know what I'm talking about. I will not repeat myself here to explain to traders why I'm expecting it to go to the level of 9950. So you may subscribe to our channel or start watching our video and you'll know what we are talking about. So this level here is very important for myself personally, that the dollar one day or in the short term, one way or another, find a way to get to this level, and we will look for opportunity to sell it here. All right? Okay? So let's use the Fibonacci extension. I did not use Fibonacci extension before I reached this level, but there is a kind of agreement between myself and traders that are using the Fibonacci extension. Okay? I want to use Fibonacci extension with this chart. I need to start from the top like this and bring it down. I discount this one here. I use it like this. I have a reason why I'm doing like this. Okay, so you can see that the 9950, $99.50 here, you see this level here is at the zone of 161% Fibonacci extension level. So if the price finds support here, and provided that on Friday, okay, the economy data is bullish for the dollar, all right? Remember, this is what we are talking about. Provided that the economy news, the non-farm data is bullish for the dollar, there's a high chance, repeat, high chance, that the dollar may continue up to this level of 9950. However, if the economy news is bearish, if the market notices that, all right, this data is going to be bearish, we may see a different picture, which means the dollar, we just ignore all this blah, 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 and acknowledge the market. We don't want to fight the market, we want to follow the market. So if the music has changed, the dance must change. To avoid making, okay, Fibonacci trading mistakes, all right, when we are day trading, one should not, okay, apply the Fibonacci levels like a science level, like magic level, all right. One should wait, validate that level. Is he a valid support level? The price at 61.8. Is he a valid support level? If it's a valid support level, the price should be able to start displaying high lows, high from that point. If it's a valid resistance level, we should start seeing at least a lower lows, lower high. All right? Price going down, price looking for a better support level. Is there a better support below the 61.8? Yes, there is one here. There's a cycle point here where the small money always likes to buy. So if you receive a signal here to buy, and the signal fell, we come out. We are watching it. We are day traders. We are agile, okay? Like Usain Bolt, all right? Okay, we are adjusting because we are day traders. We are moving fast, all right? We don't hang around. We don't slow down. If you are swing trading, you allow the fluctuation. You let it go. You don't pay too much. You don't monitor it too much. But as a day trader, you are agile. You are swift, okay? You are align with the market constantly because you are paying attention to the short-term price move. All right. So we are on the 3-minute chart, as I say to you. Now we have a kind of a double bottom here. All right. Okay, so you see like this, you say, okay, John, oh, it looks interesting. I want to buy now. All right. You want to buy now? Draw a warning line. For day trading, it's very important to have a warning line. Okay, so if you display double bottom like this, I'm speaking like this to entertain a little bit trader, though this is not about entertainment. All right. So we can enjoy this video together. Okay. We draw a warning line. Let's do this orange line as a warning line. So you say, okay, it's looking bullish. I don't want to wait for it to go above the nuts, as I explained already. I want to buy it now because it looks like a double bottom. All right. I love 3-minute chart. I don't want to look on the higher time frame. So draw your warning line. So you buy like this. Place your stop loss below the warning line. All right. Tiny stop loss and give it a chance. If it comes back below, you know that the music has changed. This is about how to day trade using Fibonacci, like the pros. I hope you have learned something from this video, ladies and gentlemen. And we put into use, okay, practice, and to make an excellent day trading decision. Until next time, ladies and gentlemen, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.